Hi, everyone. Welcome to the session today, to the panel discussion. My name is Sandeep Laxman. I head the fintech business for AWS across Asia Pacific and Japan. And today we're going to have this amazing panel discussion on decoding the VC thesis for the decade of digital assets and decentralized ecosystem. And to talk with us, we actually have four amazing panelists that I'm going to introduce to you. And they're going to talk about this. We're going to walk through this session today. So firstly, Ben, can I request you to introduce you and your VC firm and what kind of investments you do and what size you do?
Thanks, Sandeep. So my name is Ben. I work for Crypto.com Capital, which is basically the principal investments arm of Crypto.com. We are a $500 million fund investing across multiple chains and multiple sectors, including infrastructure, DeFi, gaming, metaverse, NFTs, right? So yeah, before this, I was actually working in an investment bank, a US investment bank, handling private capital markets transactions. Yeah.
Thank you. Tobias, can I request you to introduce yourself and your firm, please?
Absolutely, yeah. Thank you so much for having me on this panel today. I'm excited to talk about the space and talk about the topic. We run a blockchain founders fund, which is an early stage venture capital fund based here in Singapore. We do a lot of really early stage deals, talking about pre-seed and seed, mostly equity deals with some token deals every once in a while. We've done a bit more than 110 investments so far over the last 3 years. And our ticket size typically is anything up to 5 million USD. But typically we start small and then obviously we grow with the round size. And we look at actually quite similar to Crypto.com. We do like a lot of infrastructure. We've done some stuff in gaming and metaverse, and also like a lot of DeFi developer tools, and just really trying to understand where's gaps in infrastructure and where can we support with not just capital, but also, essentially our network and our expertise across the fund and beyond. So yeah, thanks for having me.
Thanks for that, Tobias. Bo-yeon, so Bo, why don't you introduce yourself and your firm as well?
Hi everyone, this is Bo-yeon joining the talk from Seoul, Korea. So I have like 5 years of experience in the Web3 space. For the first 4 years, I worked for Kyber SwapDex as the global marketer, and then joined the Kyber Venture as a venture founder a year ago. So before joining like Web3, I study and work in like China, Singapore, and Korea. So I'll say I generally understand well of the nuance of the different region and the industry. So talking about the company Kyber Ventures is the investment arm of the Kyber network. So Kyber network is a leading DEX protocol, mainnet in 2017, and then now supporting on 12 different public chains. So we have collected in that inside experience and the partnership, going through a various market cycles for the and then 5 years of building in DeFi space. So we wanted to share this experience, this insight with the new project and founders. So that's why we decided to start a venture arm a year ago. So far, we invested relatively small size compared to Crypto.com and then other funds. I would say around 25 projects. But the thing is that we can work very closely with most of them. And then portfolio projects are like Pegasus, Coin98, Delta Exchange, like Gamma X, Mystico, name a few. So sectors are very from like a DeFi, GameFi, or centralized platform, or even like security related project. But since our strengths are in DeFi sector, that's where we put most of our time and resource and the funds. When it comes to ticket size, actually our ticket size is relatively small, usually like 200 to 500K. The reason why is because we haven't raised any external funds. So our AUM is relatively small. So that's why we're a little bit more comfortable with the small size check. But it doesn't mean that we don't putting like enough or same level of the effort to other funds.
Got it. Thanks for that introduction, Bo. Over to our last panelist, Jaren. Jaren, why don't you introduce yourself and your firm, your VC firm?
Yeah, sure. So hi everyone, I'm Jar, founder of GuildFi, which is a gaming NFT metaverse ecosystem. Basically, we are not kind of like a direct fund, like Crypto.com Ventures, right? But basically, we are in an ecosystem that do investment in. I would say we kind of like focusing on NFTs, metaverse, gamings, right? And also social interactions or Discords, something similar to Discords. So most of the time, we looking for interesting games to invest. Especially blockchain gamings or NFTs or metaverse, right? Which everyone probably heard about it, right? So what Guilfy actually does is that we invest and then we work with the company that we invest closely. When we do investment, we don't usually do for like profits, right? But we invest to grow our ecosystem. Once we invest in them, we can find a good angles to integrate with them in terms of NFTs ecosystem and gaming ecosystem and grow together, right? Instead of invest and just let grow apart from each other, but we grow together with other games and this could even be like infrastructures, right? That related to NFTs and gaming. But so basically we can like focusing on most of the time games.
Awesome. So I'm going to ask the first question. It's going to be really basic, right? So we're going to have audience who's across the board, right? 10-year founders, and plus we're going to have new founders and some people who are new to the Web3 ecosystem as well. So here's a question. We've just thrown to them like a bunch of acronyms, right? DeFi, CeFi, infrastructure, metaverse, NFTs, gaming, right? So why don't I want to first start with, because metaverse has been talked a lot. So, Jared, I want to start with you here. To the audience, talk to us a brief about, what do you see as metaverse and NFTs, and what's the value you see, and what are the trends that you're seeing in the market?
Oh, this is actually a very easy question to answer. Seems easy. So, I mean, if we are talking about, the word metaverse, right, which probably lifts off maybe early this year, like Meta, Facebook, right, changed name to Metas, and, everyone just like suddenly pop up the word metaverse, all the big tech companies, all the luxuries brand, everyone just like, damn, we need to get into the metaverse, right? But it's actually something that is not new in the space. I mean, if you're a gamer or if you're kind of like a tech guy, right? And the word metaverse has already been there for, I would say, more than 10 years. People already interact with it. MMORPG that you kind of like play, like something like World of Warcraft, or something that is similar to like a massive online multiplayers. That is already kind of like I would say a metaverse already. And the trends of the VCs, I would say recently, they kind of like very hype about it, right? So if any, I would say not now, but like 6 months ago, if any kind of projects talking about metaverse or blockchain NFTs, you gonna get like hammered by other VCs, give me some more locations here and there. For sure not now, but 6 months ago it is what it is. I would say is something that is you wouldn't able to avoid it in the next 10 years. But in terms of like investments, is I would say one of their most is very risky kind of like investment if you want to do it. You are investing in very early stage startups that doesn't really have a product market fit yet. But it's kind of like we know that is the future, right? But right now today, like your product market fit is not there yet, but everyone just like want to invest in the futures, and therefore in terms of VCs is kind of like a market or an investment that is very interesting because it's I would say a very high risk high return kind of type, and then that is and especially in crypto space, right? And people feels that crypto is already like kind of like gambling, some sort of like VC in the crypto space is something similar with that, right? So doing risky deals, risky investment in something new in the forefront of like industries is something that they love to do, and that is hence like we see a lot of gaming deals, a lot of metaverse deals, like billions of like capital that just like pouring in these industries without any like solid good examples yet. But I think that makes this industry interesting, and would love to see what happens next in the next 3 to 5 years.
Got it. Do any of you others also invest in metaverse?
I'm pretty sure everyone will invested in metaverse.
So here's my question, right? And I'm going to put it open to the panel. Like, what do you see? How do you select? Because metaverse, to a certain extent, is also social, right? So because there is it's kind of a winner take all kind of situation. So how do you decide which metaverses companies to invest and which not to? What parameters do you take into account? In your case, Jaren, to work with, right? Because you also work with them closely. So this is a question to the panel as a whole. Like, how do you decide which in metaverse which companies to work with and which companies not to? What parameters do you select?
I think if I can just quickly jump in with a couple of thoughts. I mean, I obviously I'm not opposed to this idea that the metaverse sector in itself will be pretty massive in a couple of years down the road, and it's already started to grow. But there's of course still a lot of challenges with the metaverse concept as a whole, right? Basically, how metaverse has been as of now is like a virtual world where people buy assets or have an event, right? And it hasn't actually reached that point how I would define a metaverse, right? In terms of completely changing how things works, right? In terms of like giving people a very immersive space and bring the creator and the user to the front rather than not using them as a product in a software business. But to be honest, over the last, I would say, year, without exaggeration, I probably have seen around 500 to 800 different metaverses. A metaverse in hiking, a metaverse in health, a metaverse in education, and I could go on for a very long time. So for me right now, when I'm looking at the metaverse as a whole, I'm not really betting too much on single metaverses and hoping they're going to make it, because I just generally don't believe that we're going to have 500 metaverses live in 2 to 3 years from now, and all of them have users. At the same time, hardware is lacking to make this experience actually immersive and interesting. And we also see this, right? I mean, if you look at how many metaverses and how many users and how much hype has been generated when COVID happened, and now basically post-COVID, a lot of stuff has been gone offline again, right? Very, very few events actually have a whole metaverse sector. There's some, virtual panels like this, which totally makes sense, but there's not many completely metaverse related events anymore, right? But that was like a big part of what companies have been building on. So for me, when I look at the metaverse sector or the vertical in that sense, is more like, how can I understand what infrastructure will be relevant? For example, e-commerce and metaverse, right? Or insurance and metaverse, or developers for the metaverse. That's kind of where I can bet that the whole industry will succeed. And I can invest in a company where I have a multiple effect of them generating wealth or generating sort of benefits across the industry. And they can work with, regardless of what metaverses eventually will succeed. But me as an investor, I'm not taking the risk of investing in one single metaverse, but rather investing on something which will shape the category in itself. That being said, I'm obviously not opposed to investing in a single metaverse, but it has to be very, very strong from a product perspective. It has to be probably already validated in terms of revenue. And we look at a lot of metaverses, but that's just, I think, what you have to keep in mind when you're betting on infrastructure, which is very, very nascent in itself. But that's my opinion. Happy to hear crypto.com or any of you guys, how you guys think about the space.
Yeah, so to kind of chime on that, I kind of agree with Toby's view, right? So like investing into infrastructure that powers all these different metaverses. So regardless of whether one fails or not, right, then you still kind of get access to that kind of like, you get exposure to that kind of success, right? So this could be like on-ramp and off-ramping money into the metaverse. It could be like, physics engines that power these metaverses, right? But I think coming back to your point, right, Sandeep, about the question, metaverse to me actually comprises of a few different sectors here: gaming, NFT IP, social fi. So all of this basically, like to me, is what encompasses metaverse, and that metaverse is quite an overlapping kind of sector, right? At least for me, if I think about gaming, right, I think gaming fundamentally at the core, it needs to be a game that's pretty fun, right? So I think the issue that we've seen for play to earn games in the past, right, is that they've used a lot of emissions, right, to basically attract users to come on board, right? But so that's on the user acquisition part. So I think going forward, some of these gaming metaverses that's coming on board, need to basically find a way to kind of create games that are fun and compelling to play, right? And that I think is one of the metrics in which we kind of think about when it comes to investing in games, right? Is it fun to play? Do they have a strong, compelling economy that they're going to build? And basically this is predicated and built by studios that have experience in building games, so like track record, and I guess like number of developers that they have in the studio, and the kind of quality of game that they can build as a whole. Yeah, Bo or John, you guys want to add on to that?
I mean, the metaverse actually is not the sector we've been actively seeking at this moment, but there's no doubt the metaverse adoption will be huge in the near future. In just like my personal perspective, like the metaverse is so expensive. Generating this sustainable content, it requires a lot of design and then UI work as well, like not only the smart contract developers, and then also is quite tricky to continuously like building like really proper environment for like retail player to involve, and then just spontaneously supportly creating different use cases. For example, like could it be putting like a clothing on your avatar simulator, or it could be just creating a different type of like a trading or like game and etc. So I think to be a successful metaverse players, you have to know how to be like creating this like really strong like environment for the not only the retail users, and they understand like the how to create like a sustainable cash flow business. Because if you're just doing like NFT sales, it's like one-time package sale. Like after that, how are you gonna generate the business like revenue onward? So even I'm not a metaverse expert. That's just my 20 cents.
Yeah, no, in fact, when we speak to customers in the metaverse, one of the things that comes up is because you have to use a gaming engine, right? But the gaming engine comes with a lot of physics, right? And a lot of that physics you actually don't need for a metaverse right now. And what that physics does is actually adds overhead. So what we do is we actually help a lot of metaverse companies actually reduce the amount of physics that they need to what is required to have the social interaction within the metaverse, because you don't need to be like like an Unreal Engine 5, right? You don't need to have that level of physics in a metaverse, which is some of the most interesting discussions that I've had, right? Because you realize, oh, you don't need that, and because if you have that, the issue now, if you think about it, why you don't need it is because if you have that, your cost increase because you're going to use more resources, you're going to use more compute power, you're going to use more graphics power, and that's going to increase the cost. And like Bo, like you mentioned, you also got to create revenue, right? So one way of increasing that, increasing the length of the runway of what you've raised is also to reduce the costs on the other side. So that's an interesting thing which you've come. But talking about all the infrastructure, right? That, for example, metaverse uses or anything. I want to now get to specifically Tobias and Ben, because both of you invest in infrastructure companies, right? And we've seen infrastructure companies like Polygon do really well in the last few years. Here's my question for number one, for the audience: can you help define what you mean by infrastructure, right? Which layers they essentially comprise of, and what do you see when you invest in one, right? How much time does it take to build an infrastructure company? What have you seen that separates the ones that have succeeded from ones that don't?
Yeah, maybe I can go first, right? So infrastructure, I think to us encompasses many things, right? It's like kind of like an all-encompassing term for things that don't fit into the other categories. So this could be layer 1 blockchains, it could be layer 2 scaling solutions, it could be on-ramp, off-ramp, it could be anything else that basically powers other protocols, right? It could be like a central limit order book in which other DeFi protocols kind of build on as well. So infrastructure, I think generally the criteria is that other things would build on top of this infrastructure layer, right? So I think, of course, these are different like sectors once again, right? So if you think about like layer 1s, for example, right? So I think layer 1s have to be very technically strong. So I think in the last cycle, I think a few months ago, everyone was talking about near, right, infinite sharding, the fact that the team is very technically competent coming from Europe, right? But at the same time, like in recent months, people have also been talking about how layer one chains also need to have strong business development, right? And the reason for this is because you need all these new decentralized apps, these dApps, right, to build on top of the chain, and that's when people are paying for gas and they are like transacting, and then there's like a value accruing to the layer one treasury, like for example at Polygon. So I think I think it really depends on the kind of like what particular sector this infrastructure sits in, right? But that was an example for layer ones. Yeah.
I think how I would look at is like that within infrastructure. For me, there are essentially three different layers, right? The number one layer is sort of what right now the AWS and all you guys are, right? You're basically making everything possible. But right now, that obviously is centralized, right? So you could essentially think about having a decentralized AWS at some point in time, which like powers everything, which sort of runs on top of that. A second layer, which is what Ben just talked about, right? The layer ones, the layer twos, essentially all that builds that infrastructure on the blockchain side. And then you have the third layer, which is the services which are built on top of that, right? So you think about like the wallets, the decentralized exchanges, decentralized, all these type of things, which is happening, right? And if you look at Aptos and Sui and all these like new layers which are coming up, you exactly see what that's happening, right? So, investing in layer ones can become very expensive very fast, as we have seen, right? Which is obviously like good and bad at the same time, but like valuations are exploding, right? At a very, very massive scale. And basically having layer ones or layer twos in a test net essentially at a $2 billion valuation, right? At $1 billion valuations. So it's not everybody has a chance to invest in those projects, or not at a meaningful and significant scale. So then a lot of people look one up, right? As okay, what's the new NFT marketplace on Aptos, right? So what's the new wallet's happening and all these things. So like, I think infrastructure for us is like these 3 points. And then if you go from the first layer I mentioned to the third one, the technical skills become more and more relevant, right? Because if you build a decentralized AWS, that's not going to be a random project, right? That's probably going to take a lot of R&D. That's probably take a lot of tech development, right? Similar to what AWS was in the beginning, right? And then if you build the layer ones and layer two, again, people look at very technical. But then if you go further and further towards a service layer, it becomes more and more obvious that the business side will be relevant. Not saying it's not for the other two, but that's just general perception what people are having. But I agree with Ben that like the business side is important on everything, because the challenge with only having developers in a team is that UI and UX is failing because it's very intuitive for a tech person, right? But like obviously what we have seen and what is a challenge in the crypto space is that a lot of the infrastructure isn't very friendly, right? If you look at a MetaMask, and I wouldn't say that that's like the most friendly and nicest thing to use, right? But it works and people are using it because it has a first mover advantage. But I think as you move more and more into mass adoption, these things eventually need to change to an extent, right? And make it easier for anyone who is not crypto native and who doesn't want to spend 10 hours on a YouTube video, I'm exaggerating, to understand how all this works, right? So, and I think that's what we need to move forward, and that's how I think about infrastructure. And then it's about pivoting yourself of, what kind of risk layer you want to have in terms of making the right choice on these three layers in terms of infrastructure.
Yeah, it's very interesting, right? So I was looking at this number recently, and what I realized was that the number of active like Ethereum wallets, right, I think is the same as the number of internet users we had way back in 1995, right? It's that early, right? We don't realize, though there's a lot of talk about it. Adoption is still really, really early. And yeah, so what are the problems? So you talked about like MetaMask, right? Are there other problems that you say a startup that's Web3 startups need to solve today at the infrastructure level?
But yeah, I mean, there's a lot of challenges. I mean, MetaMask is just one example of like a decentralized wallet essentially, but I'm talking about more fundamental problems, right? I mean, one of them is security, right? I think a lot of stuff has recently been shown that, one issue can lead to a lot of different issues in the space, also because the market is smaller and can be moved easier. But like also hacks and all this stuff from a cybersecurity perspective, I think needs to be addressed at some point in time. Then I think the whole navigation in the space, right? There's no platform right now which can give me access consolidated to different tools and services, right? And I think even research in the space, right? I mean, like just navigating in the space right now, you need to be active on a lot of different channels. You need to go from one platform to another. You need to do a lot of conversions, pay a lot of money for it, right? I mean, obviously it depends on chain and stuff. So I think the whole experience just needs to be easier. I don't think it's like one specific area you can say, okay, only the wallets need to change, or only this needs to change. I think it's just like the experience in general, right? I think if everybody goes into crypto right now, it's not a very intuitive experience start to finish. There might be better and worse parts, but I'm thinking more like general. But a big part for me is the whole like security layer across that, just making sure that everybody can at least transact securely and safely within the crypto space.
I think I can add on that part a bit. Coming from, I would say, DeFi doing, right now is all about gaming and metaverse, but I used to be, engineers and you're building layer twos. I mean, if anyone just remember about, Plasma, that is something before, CK and stuff, I was building that kind of stuff. I would say, even from me, I'm in the space for at least, 6 years. I just feel that what is the most important part that is missing right now in the space, especially, I would say infrastructures or layer one, or, I would say crypto as a whole, right? Is the thing about user experience is pretty bad. Like even, I'm in the space for 6 years. I don't feel that we actually like having a lot of, user experience improvement that much. MetaMask, a few years ago and today, okay, UI is different, but fundamentally, how to interact with it, and all of the interactions and the informations that you're receiving from them, I would say it's still the same because it's blockchain, right? Which I'm pretty sure no one have the answers yet, how to make this both kind of like decentralized plus like secure, and having one of the best user experience, creating the easiest way to onboard, why saying that not your key, not your coin, right? But I mean, I would say it's a very, very hard, tough questions for everyone in the space. Some people say, especially, I would say personally, I don't, decentralized is something important in this space because it's blockchain, right? But the question is, let's say you need to tell your mom, right, to create a wallet of MetaVerse. Do you think that she's gonna trust herself keeping the key, or trust a bank, or like a centralized service to keep a key for her? Like the person, I would say the probability of her losing the key and their, like the centralized service losing the key, which one is bigger, right? For sure, like someone probably say, this is blockchain, you need to keep your assets, right? But I think this is the chicken and egg questions that is not being solved yet, from whatever perspective we are looking at, right? And we have some solutions that interesting, like like social wallets, right? You have like a couple of your friends, a couple of your cousins keep partial part of your keys. You can, if something happened, you forget about it, you can go and ask your cousins and your friends to unlock your keys. But I think most of them are basically concepts or like POC, and no one actually grew big enough to see does it actually solve the pain point that we are facing, right? I would say the come back to the like Tobias said, right? Like the flow, the user experience is still nowhere near like mass adoptions. For us, like new generations is okay. You can just like keep your keys, hold your ledgers, interact with MetaVerse, but it's pretty hard for other generations, which is like like billions of peoples, right? So that I would say my take on like infrastructure is that how it looks like today. Okay.
Got it. I want to bring Bo here because I think Bo also mentioned that she actually invests in security startups. So I'm very interested to hear her perspective on what she's seeing in terms of security for Web3 companies and blockchain companies. Bo?
Yeah, I mean, I just want to add on to Tobias and then Jarindr, like the point. I think like mainstream stream adoption doesn't have to build by a Web3 project or Web3 devs only. Like there's a lot of way to onboarding like users in a more seamless way by partnering with the institution or Web3 company. Like for example, recently there was an announcement by investment giant KKR recently announced that they will put portion of their private equity funds on the public blockchain. Here, like it was an avalanche. Like this means individual investors now have access to high quality funds that was only available for corporate in the before. You know, this like process of fundraising and distribution after closing was extremely time consuming and complicated for the fund manager. That's why that was only targeting like corporate or like really few super wealthy people. But like look at it now with this like small contract and then smart contract developers help like support, KKR now can easily open the access to the individual, and individual now are able to invest in the private equity, you know, that tend to outpull from the public market. So, and like there already are like hundreds of like, you know, use cases and like the happening through like adoption happening through this like partnership between institution and the Web3. And I think over time, we'll figure it out, like I find the way to solve this, you know, unfriendly UI and then infra, linking of the infra security, etc. And then back to Sandeep's question in terms of security in blockchain funds. Of course, I think it's like one of the most important aspect to pay attention to, is because no matter how the product, like the project and the founders like working hard to build adoption, like here comes the adoption again, adoption or building like user acquisition, if there's like small flaws or like really small, a small like smart contract bug that can lose the trust, like users' trust or the user funds, is almost impossible to bring that momentum or build that trust again. So like it's always, you know, it's like we can always emphasize on the audit process and then open to like open your GitHub to public and then see if there's any you know flaw or like the box of vulnerability that can be prevented in the beforehand. Of course, in the early stage project in the seed round, they having like a private like GitHub, and then their like libraries all closed to protect their idea, understand. But once it hit to a certain level, that like funds actually putting the money inside the protocol, I think the founders should be a little bit more open and then cherish about the decentralized power of like DAO and community.
You know, I was just thinking about when we were discussing, right? So because AWS also, we got so many customers using us, right? So one of the things that happens is, how do you talk about security, right? And the way we talk about security is we talk about this shared responsibility model, saying that it is it's shared between the customer and partially on us, depending on the services we use, right? So cloud security essentially is shared, right? And because there's certain things, for example, our regions and availability zones, we control the physical security, you know, the you know, backups, etc. But if you use just our instances, then you have to take care of OS updates, for example. On the other hand, if you use our serverless services, you then don't even have to worry about that. You just have to maintain security at the application level. And I think the same thing will happen in the Web3 world, because what's going to happen is you will have on-chain security off the chain and security on the chain, right? So security on the chain is by, you know, whatever chain that you're using, what are the security features that come with it, and then your application on top has to have a certain level of security, right? So I think it's kind of going to reflect the same thing. And you know, a shameless plug here, one of the things that we do is we actually work with, so for fintechs, we actually have a program called FinTrust. So where we work with fintech startups, helping them improve their security posture, right? Because like I said, we can, like for AWS, we can manage the security that's on our cloud, but for the customers, how do we help them with the best practices, right? So we have this program called FinTrust where we work with our fintechs, and we take them through the assessments, right? So I want to give it open to actually all of you, to any of your portfolio startups you want us to help them with, you know, the FinTrust security assessment. We're happy to take them through it, do that assessment for them, and walk them through. So, you know, I'm sure as time goes on, there'll be standards that'll come in, we've seen that in the financial services world, standards come in. PCI-DSS is a very famous standard. ISO 27001, SOC 1, SOC 2. So I'm sure there'll be other standards that will come in for the Web3 and blockchain world. But until then, we're happy to help the startups and in the blockchain space and Web3 space to help with their best practice in security. Right. I'm going to quickly shift to the last part, which I wanted to talk about, which is, for me, it's my favorite interest because I'm in fintech, and that's DeFi. Right. So I want, what are the trends that we are seeing in DeFi? Right. There's a lot of talk about decentralized finance, that it is going to democratize the way finance is done. Is that actually happening? Do you see fintechs? Do you see Web3 companies do that? And if so, what are you seeing, like just among your portfolio companies itself, in fact?
Sure. So I think the premise of DeFi is that we are trying to build financial systems and financial solutions without intermediaries, right? So when you think about the traditional the TradFi model of doing things, right? Basically, when an end client wants to basically access the markets, right, he needs to go through a whole series of different intermediaries, prime broker, clearinghouse, other centralized parties. And along the way, each one of these different parties takes like a small spread or a small fee, right? So by the time the end user gets to access the markets, he basically has to pay a whole host of fees, right? And I think DeFi is trying to solve some of these issues, right? For example, automated market maker, SushiSwap or Uniswap, they're trying to create an AMM curve that basically allows you to, interact with the pool rather than to interact with, different counterparties, right? So I think that's the premise of DeFi here, right? So I think when you think about what we saw during DeFi summer, a lot of these protocols, and of course, Bo, you can talk about Kyber later on as well for DeFi, right? So what we saw was that different DeFi protocols were trying to build the Gen 1 like DeFi protocols, Uni, Sushi, Compound, and Aave, right? Money market protocols, DEX protocols. And as we kind of move into 2021, we started seeing the emergence of new alternative layer ones, such as like Avalanche, Solana. And then within DeFi, there's also this concept of primitives, right? So for any for DeFi to work on any chain, you need a whole set of primitives to work. For example, you need DEXs to swap between different tokens on a chain, for example. So I remember last year, people started looking for new primitives on these new chains that were coming up, trying to find the Uni or the Aave of Avalanche or Solana and investing into them. I think right now, as the narrative kind of shifts away from alternative layer ones back towards ETH, POS, post-merge, right? I think a lot of funds are now looking for innovative protocols that are starting to build on ETH once again, right? And of course, this is based on understanding that ETH as a layer one always has the highest TVL, and any builder that is building something really innovative should always build on ETH because they are rewarded by having the most liquidity by building on ETH. So right now, I think a lot of people are trying to find these new innovative protocols. For example, right now we start talking about where yields are coming from. So protocols like GMX that are building on Arbitrum are trying to find new ways to provide yields for people that stake into some of the liquidity pools. At the same time, wanting to address NFT liquidity issues, protocols like SudoSwap are trying to create ways in which rather than trading against counterparties, you create pools in which you can trade against, right? So those are some of the examples that people are kind of looking at in the DeFi space at the moment.
Yeah, I was saying, Bo, we wanted to come to you next.
Sure, I can't agree more what Ben just mentioned. And then, since Kyber was we were running a business in DeFi even before DeFi terms came out, we've been, actually went through partner and work with the really various type of different DeFi partners. And then sadly, most of them somehow disappear somewhere. It could be some kind of smart contract vulnerability incident, or it could be just the market fit wasn't or maybe they're just too early, or maybe there was not enough the trader that understand this kind of advanced finance instrument that could be really a big hit in the near futures. So, and then also innovation comes with the risk. Look at the Argo stablecoin. Everyone was so fascinated about when the Argo stable launched, but we have seen a lot of defagging happen, and then some people, maybe we should just go back to the basic stuff, just a centralized platform just backing up the collateral on the stablecoin, etc. But when you're thinking about like even this original DeFi was built during the Ethereum cycle, and then like the NFT GameFi metaverse was built during that DeFi cycle. So what I believe, this cycle continues. Whatever building right now under the waters will be the one leading a next bull market. So that's what Kyber Ventures is focusing on. And then KKR was like really good use cases, like opening our eyes, like, okay, I mean, it's not like decentralized finance, but like this smart contract and then finance sector combined and come up with the great use cases helping the retail users. So we're looking like try not to limit ourselves to just like decentralized finance. We're also looking on the finance that could helping the major adoption. It could have centralized like hybrid business model, but at least it's easier and then safer for the newbie to onboard. And then like later stage, we can introduce a little bit more advanced finance instrument through the time.
Awesome. Thank you. I have one final question to wrap up this panel because we are almost on time. And that is government support, right? What do you see how do you see governments responding, and what do you see governments need to do to support the growth of Web3, right? And decentralized companies over the next few years? And this is a question I'm just going to keep it open to the panel.
Yeah,
Okay.
I'm just going to quickly add a couple of thoughts. So I think for the most part, governments have been reactive to what's happening, but haven't been really proactive in terms of like actually understanding the space before something goes wrong, right? Right now, with all the incidents happening, a lot of governments now look at it and okay, how can we regulate stable coins? How can we protect retail from in the space? But I think very few governments, I think Singapore might be one of them, I think Thailand to an extent as well, US is are actually trying to understand the space before stuff is happening, right? And I think a lot of that needs to be from the government actually collaborating with the players, right? Collaborating with the entrepreneurs, with the funds, and use their knowledge in order to educate themselves of what's happening. Because, as we probably all know by now, it reached a size where it can't be overlooked anymore and just won't go away, as a lot of people have been thinking. And I think we just need to have that attention, because I don't think that, the regulatory aspect will come. And I think long-term, it's going to be bullish, because we need to have a bit more regulatory side on what's happening, what's not happening, because right now this whole like, okay, we're going to ban it, we're not going to ban it, we could this, that is probably also not very helpful to the space. So maybe short-term, medium-term, it might be a little bearish sentiment, but I think long-term, it will add a lot of value to the space if there's attention to it, and if there's some sort of, regulatory aspects on how the space should move forward. So I think for me, it's really about that government takes this serious and works with industry leaders in order to understand the space, and not just is purely reactive to something if something goes wrong and then basically jumping in. And I think this needs to happen on a way broader scale across different verticals, not just the DeFi side. Of course, that's leading, but I think it's a whole ecosystem which need to be understood, and then the rules need to be shaped with the players within the space. And very few governments are right now on the forefront of doing so. When we need to see a lot more push across different countries and maybe even cross-border to enable that.
I would say it's pretty hard. I mean, just imagine you are a president of a country, right? And then you need to regulate something new that there's no boundary between country. You can just move from a country to another country in a few seconds, right? Without any trace, right? So, if I'm a president, right, I would probably, okay, this is a new technology, and it's something like a breakthroughs, right? That is very interesting, and it's kind of open up a whole new tons of possibilities. But as a president of a country, we also need to protect our countries, right? And then having something that can just flow around without any trace, and it never happened before in the past 100,000 years, right? And this, I would say, is one of the hardest thing, how to balance, right? How could you basically support the technologies of Web3, but also protect your like your country in certain ways, right? It's very very hard to do. We always saying that our governance is not supporting all these Web3 protocols, stable coins and stuff. But if you look in I would say in a higher levels, it's not that easy for them to do. We also, I would say I understand that, but I would say we also still need more support, from the governments, instead of they wait for something to happen and then basically, ban them or, like do something, react to that situations. They should, I would say, spend some time to learn more about it, find a way for them to at least able to grow initially. And you can have a proper regulations to regulate it afterwards. You might force everyone to just not anyone able to issue stable coins or keep stuff in the place, right? But right now I think it's kind of like everything is kind of like gray area. Everyone don't know what they can do or they can't do, right? Like, okay, what are the regulations I need to follow if I want to create a stable coin, right? There's no, you can't do it for a certain country, but for some countries you can do it. So it's I would say if governments able to look deeply into it a bit more and come up with some regulations that not waiting for them to just react to the events, but support initially, right? But with some for some rules, right? I think that would be much better for the industries in the long term. Otherwise, everything's gonna be so slow because they need to wait for something to happen. They need to wait for some DeFi to build up first before doing, starting to react on those kind of stuff.
Got it. So more proactive than reactive approach. Yeah, got it. Awesome. We are at the top of the hour, but I would like to thank all of you for some wonderful insights. Thank you, Ben. Thank you, Tobias. Thank you, Bo, and thank you, Jarin. And folks, for those listening, I hope you had a wonderful time. And of course, you can reach us to all of us on LinkedIn. Just search for us, and happy to connect post. All right. Thank you all. Bye.
Thanks, everyone.
Thanks, everyone.
Thanks, Sandeep.